So let's get to the sponsor opening bell on the way. I am Bosun Amapaye, and this is your show for this Thursday, the 3rd of December. Let's look at the marketplace, but let me welcome Malikan Statue from Nairobi, the CEO and founder at Rich Frontiers Management, Akitide Suleiman from Greenwich Merchant Bank in Lagos, Nigeria, and Oyeka Ijoma, also from Lagos, Nigeria, but of course from Betiva Capital Management in charge of industrial use analysis. Nigeria stock markets on the third trading day of the week, which of course the second trading in the month of December, softened 0.26%. The Ivorian market was smaller, less than 1/10. Egyptian market also down 0.16%. Kenya roared 1.27%, just as the whole conundrum around exchange rates and all of that got the better attention of everyone about the Standard Bank analysts whose written report or investment note became a subject of discussion, whether some folks at the central bank were a little bit unhappy with the issue around multiple exchange rates. We're dealing with similar situations in Nigeria. South Africa's GSE 1.34% up yesterday, a very strong one in correlation with the emerging markets. So let's talk about East Africa, where the Fitch rating sees a gradual recovery of African banks in 2021. That seems to be a divergence from what S&P Global ratings published 2 weeks ago about a 3-year recovery phase for banks around the world, and in particular for about 6 African banks, Kenyan banks among one of them. Standard Bank Kenya refutes analysts' notes on FX rate or multiple FX rates in the market. Ali will have to unpack this for us. Access Bank buy Atlas Mara assets in Botswana, Zimbabwe, and Zambia. This is one big deal as Atlas Diamonds begin to unpack his Atlas Mara banking project on the African continent. And this is Ibuka program by the Nairobi Securities Exchange. What is it all about? Well, we're happy to have Metropolitan Health Services join this program. Ali, let's start on this very important story around the multiple exchange rates, what Standard Bank said.
So Standard Bank put out a research note a few days ago where they referenced a bifurcated foreign exchange rate that had unfolded in the FX markets. And basically they were saying the rates that were being published by the central bank were diverging from what was actually happening in the interbank market. Basically, the central bank had been publishing a rate of around 110 or thereabouts, and it was increasingly obvious that the interbank market was trading at anywhere from 111.50. There were rumors of it trading as high as 115 during the last few sessions. So basically, the Standard Bank note was referencing this divergence, which they called a bifurcation in their research note. And essentially, yesterday, late afternoon, we saw a note come out of Standard Bank Kenya disavowing the research note, saying that the research note was issued by Standard Bank Africa Group. And as far as they were concerned, it was not from the Kenya branch. And this caused, of course, a tremendous amount of brouhaha and commentary. I'm sure you noticed that on social media in particular. Every financial commentator waded in. Today we've seen the shilling officially move from 110 to about 111. So quite a lot of drama, and historically the shilling, one of the best performing currencies in sub-Saharan Africa, we're down about 10% year to date, but obviously it's become highly sensitive, particularly with the regulator, and our regulator, a little bit like yours, is a sheriff, and if they don't like what you're saying, this is what happens. So, so the sheriff came to the research bar, and this is what has happened. Look, the main story with the shilling is that it has been on a weakening trend. We're down 10% year to date, about that. We are applying for some pretty chunky loans from the IMF, which will be looked at in the first quarter of next year, the World Bank as well. Now, both those institutions have been talking about having a weaker shilling. So I think the perception is that if we do go to those institutions for these loans, essentially we're going to be looking at a weaker shilling. And I think what the central bank was unhappy about was probably that this was becoming a negative feedback loop feeding into a weaker shilling, and they wanted to put a stop to that. So quite a bit of drama around that. Going to your other stories, if I may, Access Bank buying Bob Diamonds, Atlas, Maura assets in Botswana, Zambia, and Zimbabwe. Look, I think this is a clever trade by Access Bank. You're getting a license. These banks were not really meaningful in their presence, so you're getting a presence. You're not having to pay some silly premium. You're probably getting it at a good discount, and you're expanding your geographical footprint. These are important markets, plenty of volatility in them, but there's plenty of volatility across the continent. So if you're operating on the continent, you know, Botswana, Zambia, and Zimbabwe are meat and drink for you. Fitch ratings, a little bit more bullish, as you said, than S&P. You know, from what I can see here in East Africa, I would definitely say this is going to be long and drawn out, and I would err towards the S&P perspective. Although, because, you know, we've seen significant weaknesses in big parts of the portfolio. I mean, tourism as an example here in Kenya, you know, tourism numbers have crashed. So, you know, if you have a big loan on that front, you're restructuring it. And there are many other areas where we're seeing that. KRA updating its iTax portal ahead of digital services tax. You know, this is their big thing. They think they're going to collect billions. I'm not so sure. And I also think it could be counterproductive if you put too high a tax on what is a fast-growing part of the economy. Afreximbank investing 25.2 billion in Lindi Jumbo Graphite. This is an interesting story in the context of the unhappiness amongst a lot of investors who have invested in Tanzania, not least of whom your own very own Aliko Dangote, who, because of his position, was able to be quite outspoken. Others have taken a different tack. He actually said it how it is. So, you know, this is Benedict Aroma believing that he probably has significant leverage over President Magufuli, unlike other investors. So he's not probably bothered by the political risk.
Yes, interesting. Yes, political risk on one side. I'm sure today, I know we're listening to you around the FX stories in Kenya. But let's throw that into the West African and Nigerian market. I know the Ghana story around the cocoa farmers pension scheme, but let's start with the foreign currency liquidity, which Fitch rating says presents risks to Nigeria's bank ratings moving forward. The central bank continued to fire rapidly into the market around the diaspora remittances. New rules and regulations from the seat is now being put out. All bank accounts, Naira accounts open for deposit or receipt of remittances, diaspora remittances has now been officially closed. The central bank says that should be done with immediate effect. We spoke with one of the CEOs of the stockbroking firms in Ghana yesterday evening, African Securities, and he says investors in Ghana are snubbing the stock market. In fact, they snub the stock market since the year started because yield on government treasuries is between 18 and 20%. So the stock market is down at least about 14% year to date if you check Bloomberg index data. That sounds like the opposite direction in what we have in Nigeria. Suleiman, I could see you smiling around there about this divergence.
Yeah, I mean, it's an interesting market just across the border there. We are seeing a counter or just like an opposite of what we are seeing down here in Nigeria. I think it only puts light into what the CBN is actually trying to do to drive in, financing into the real sector, into into companies that can propel growth in the market. I looked at the yield curve of the Ghanaian Treasury bill this morning, the 1 year, and looking at it, we'll see that it's been hovering between 15% to 20% all year, and that's significant. The lowest it came to was about 14.226, and that tells you how attractive it is there. I won't be amazed if our counterparties here start trying to dive into the Ghanaian market, the Kenyan market, because the Kenyan too is about 17-18%. So it's an interesting space to play, but I think we should look inward here and see how we can, help finance the real sector, drive the real sector, and stimulate growth, because every economy, every country right now needs to actually grow from within. It needs to be an implosion. We need to stimulate growth and dive out of this recession as quickly as we can.
So, in terms of how the central bank has been firing furiously at the FX market, what's the view within the capital management? What are the results that we see?
I think a lot of the things have already started playing out the way we sort of expected them to play out. We see that there's still significant pressure on the naira, boosted by activities within the festive season. We saw that the exchange rate at the parallel market went up to 500 a few days ago. It has started coming down as the CBN has started, has started putting forth circulars and, statements that, could possibly help reduce the pressure on the naira, such as the diaspora remittances in. However, not much has changed. There's still significant depreciation and devaluation risk, in the currency markets in Nigeria. We are still going to continue to see pressure on the naira. I guess the only positive thing is that oil prices seem to be holding steady, at current levels. The approval of the Moderna and the Pfizer BioNTech vaccines in the UK seem to be, quite positive. Seem to indicate that we might see a lot more faster traction in vaccine production and distribution across the world, and that would only be more positive for crude oil prices, in the near to medium term. However, it's interesting to note that despite all of this, analysts' consensus predictions for crude prices average crude prices in 2021 seem to hover just below or just above the $50 per barrel mark, which, while it's an improvement from what we saw in 2020, is still not significant enough to push to help solve Nigeria's foreign currency woes. In the long term, the sentiment about holding the naira has depreciated significantly for almost all classes of investors in the country, and we don't expect that to change anytime soon.
So thank you so much. We'll still talk about the Nigerian market moving forward, but let's touch on the Southern African market space. The South African GSE yesterday, you saw there, went up more than 1%, or 1.26%, just as the currency, the rand, took a bit of a beating, around 15.34 on the US dollar. The country's cement maker, PPC, says it's expecting its core earnings to be up between 12 and 17%. That drove up the share price on Wednesday about 13%. SASOL has kicked off that joint venture with the American Lindon Vassal to cut annual whatever debt by 30%. The company is neck deep in debt. It's trying to find some relationship to get out of that. A share buyback program by Nutritional Holdings is set to take off about 3 billion share cap. Botswana Diamonds says they discovered a new kimberlite pipeline around the Southern Africa's Thorny River. But very interesting story for me from South Africa is that companies that are distressed can file for lower electricity tariff. It looks like almost everyone will queue up, isn't it, Ali?
Yeah, I thought that, that was a very innovative way of stimulating the manufacturing sector, in the sense that you're creating a price sensitivity, you're helping your company's production. And I thought that was actually a very clever intervention on the part of the South African policymakers, and speaks to the intelligence of those same policymakers. I mean, this is notwithstanding the challenges that the electricity company has, but it's a good way to put money to work. You know, people are going to be employed if the electricity is provided. So absolutely, thought that was very clever. Botswana, just to mention, I think is opening up again for tourism. Tourism is a big piece of the economy. And obviously diamonds has historically been the pillar of that economy. That's interesting that they found a new pipe that will probably be very valuable. Diamond prices, as far as I'm aware, have not been muscular this year. They've been soft, I suppose. Not as many weddings happening on Zoom as they would if you were able to do them physically. But I think that's a good step forward. SASOL, as you said, looking to cut its capex, heavily indebted. This is an interesting development and a positive one if they're able to reduce the capex by 30%. And then PPC, that's interesting, 12 to 17%. You know, the South Africans have been talking about a big infrastructure program in order to boost the economy. And you probably think that cement makers might benefit from that. But it's interesting that they have reported 12 to 17% in the context of the economy that we've had this year.
Okay, so when we look at, Ali, just a quick one, there were two reports this morning. Goldman Sachs was bullish on copper moving forward, talking about a copper rally, while Deutsche Bank was bearish on gold prices, talking about a 30% decline. Give us a few seconds on your thoughts on this to ask.
So we've already seen a substantial ramp higher in copper prices in the last 4 to 6 weeks on the basis of Chinese demand sucking prices higher into next year. So, you know, for me, we've had a significant rebound in the commodity complex, and the copper price has really been an outperformer. Whether it's a get out of jail card for Zambia is a different matter, because it's more complicated than that. But definitely, I think it has further to run just on the price action that we've seen. With respect to gold, I think, you know, we had this big sell-off from record highs just above close to 2,100. We dropped below 1,800. Look, we're in an environment where all these Western economies are printing money. 22% of all dollars in circulation were printed this year. This is an extraordinary phenomena and money printing experiment we haven't seen since the time of Weimar Germany, when it took a wheelbarrow of cash to buy yourself a loaf of bread. Now, in that environment, I have to beg to differ with Deutsche Bank and say to them, you have to be insane if you are prepared to sell gold in such an environment. There is no logical reason for that, in my view. And I would say that gold presents itself at this level of around 1840, a unique opportunity, risk-adjusted opportunity, and I'm looking for record highs into next year. And I think, you know, you have some very clever people who manipulate that price at the stock at the exchange. They got fined $1 billion for it, and they better stop, because at some point it's going to be a freight train. When all your money's being devalued, what can you count on in this world? Some people think Bitcoin up to some point, but ultimately gold, 5,000 years, has been the store of value.
I'll stick with gold for now. I can count on the first 5,000 years. I can't count on the next 5,000 years. So I would rather bank on 5,000 years of history.
Yes, yes.
I'm sorry, but let me ask Suleiman. Thank you, Ali. About today's the OPEC final day of their meeting. It's been long drawn since last weekend. What's in it for Nigeria? What should we be on the lookout for when they conclude meeting today?
So for the OPEC, it's interesting that that they finally got to a conclusion on production cuts. It's good that they finally got a production cut to agree on, because you remember back then in February, March, where they couldn't settle for a production cut. There was a distortion into the market where we saw oil dip to lows. Right now, since they've agreed on to maintain the 7.7 million barrels in production, it's going to be good for Nigeria, because we'll see price stabilize to a certain level and remain with further boosted by the vaccine production and adoption in the UK and upcoming adoptions that we expect. That would mean that Nigeria can finance its budget in a better, to a certain level, and reserves will as well climb up, because we, like you agree with me, two major factors that contribute to our reserves are receipts from oil prices, from oil sales, and as well capital importation. We know remittances have been solid, but we expect that should even improve with the latest framework that the central bank has put in place. But holistically, if members of the OPEC can maintain and abide by those quotas, we expect that oil prices will stabilize. We know the UAE is disgruntled by developments in terms of assigned quotas because of their increased production capacity. However, with the offering of them being on the monitoring panel, we expect that this might help in terms of compliance. And you see that Nigeria has not always been so compliant. That is why we saw our production being cut from about 1.8 million barrel to about 1.6. And subsequently, we are still expecting that will go below, because there was a whole lot of overproduction done in the first quarter. But significantly overall, we expect that our production level will decline marginally to about maybe 1.4 million barrels per day, and prices will stabilize about $45 to $50 per barrel, which would fulfill the benchmark of $40 per barrel, which was in the 2021 budget, and as well accrue some $5 thereabout to the sovereign reserves, the excess crude oil accounts, and as well this would bolster our external reserves, so that the foreign currency liquidity, which it's likely going to be a challenge in 2021, would actually be tempered down a bit, because the more receipts you can get from oil and the more capital importation we can get in 2021 will help stimulate the market and the economy in terms of forex liquidity. And I'm sure these were the pointers that the Fitch rating looked into to say that foreign currency liquidity will be a challenge in 2021 for banks, because if capital importation that declined about 78% in Q2, and oil prices that were trading at 2030, we still hovering about $40 per barrel. That means dollar liquidity remains shy, and the central bank will not have so much arsenal to deploy in sustaining the market in terms of providing liquidity.
This is like a very tough road. So next year, but let's see how it all goes. But let's see how it goes. Let me bring in very quickly the North African space. Then I'm asking you just one quick outlook of the market. I love the Casablanca story about launching a new stock market index on December the 8th. That's next week. We'll try and find out what that is all about when the index is unveiled. what's the components, which companies are going into that. Egypt's unemployment rate down to 7.3%. This is one amazing country. You just don't understand how to get things done. General Electric of Egypt splitting its shares into 5 units. That sounds like one very big story. And Extracted Oil Limited has a new chairman of the board, Jadala. And Morocco's Treasury says it's raised 5.5 billion dirhams by Treasury bills option. Of course, that's the easy way these days to borrow by the governments across sub-Saharan Africa, including the Sahel region. Let me just take Ali will wrap it up for us. Let me ask Oyeka about the market situation for today. This a bit of softening one day to the other from the central bank and the equity side and all of that. What's your take? Is everyone waiting for these special bills from the central bank before we see any major move on the fixed income side?
Basically, the information about the special bills has really caught a lot of investors' attention. We know that the rally in the equity market that we've seen in the equity market in recent months has had very little to do with fundamental drivers. It has had a lot more to do with liquidity, excess liquidity that would have normally been pumped into the fixed income space. However, with the low yields in that space, investors have been pushing into the equity markets to find proper returns. Now the CBN has announced these special bills that they'll be offering special bills to curtail liquidity. And one would expect that if the idea is to help curtail liquidity, the interest rates, or at least the yields on these securities, will be attractive enough to get investors to push their money back into the fixed income space. And I think that is where institutional investors like the PFAs and the banks are really that's where their head is at right now. And a lot of people are trying to hold on to some cash and even free up some cash to make sure that they take advantage of these opportunities when it comes to it. But we're still seeing activity in the equity market nonetheless, because unless the CBN is coming to mop up 3-4 trillion in one day, there's still going to be enough money to play in the equity market for now. Yeah.
Okay, that's very happy. Ali, to wrap it up for us on Egypt's unemployment rate, how are these guys getting things done?
Isn't that a phenomenal number? I was just looking at a report from UNECA who was saying East Africa lost 36 million jobs in this pandemic. And here you've got them dropping the unemployment rate. Really what they've done is they've crowded in investment. They've made all the right moves. It's a reasonably sophisticated African economy. And essentially it is an open door policy. And I think even with tourism under pressure, that is a phenomenal outcome. And really, I can't commend them enough. You see it in the currency behavior, you see it in the local markets, and you see it in the support that they're receiving from multilateral institutions who seem to me to be tripping over themselves to write very big checks for them.
Surprisingly, we've got something we all have to learn from the land of the pharaohs. They seem to have a magic wand somewhere there they find in the desert. Perhaps one of those, the Giza pyramids, somehow, some time from there, where it all started from. Thank you so much, Ali Kansaju from Rich Frontiers Management. Good to have you this Thursday. Akintunde Suleiman, thank you so much for coming through from Village Merchant Bank. Thank you. Anoyeka Ijeoma, thank you. We appreciate your time as well from Petiba Capital. All of you, thank you for being here. We'll see you again tomorrow, Friday. Bye for now, everyone. Have a good day.